Hello everyone, welcome back to my channel. So this is going to be the fourth lesson of the trading series. I hope everyone is enjoying it so far and you are starting to learn stuff. If you are, hit me up with a like and it really helps support the channel. And if you haven't subscribed, please go down and subscribe. I really appreciate it. Okay, so in this lesson, I'm going to go over the Fibonacci retracement tool. So what is Fibonacci? Fibonacci is a number sequence that was developed way back in 200 BC. And then it was further developed back in the late 1200s. And it exists everywhere in our world today. Let it be like spirals, seashells, the petals of a plant. It's everywhere. So the Fibonacci tool is a very important tool to have as a trader because it can give us levels where the price action can retrace, but also it can give us price levels of where the price can extend. The Fib tool really works in trending markets in the sense that if the market is trending upwards or trending downwards. So therefore, in a flat market where it's kind of consolidating, the Fibonacci tool is not very good. So since many traders around the world use the Fibonacci tool as well as all trading bots, it becomes a self-fulfilling prophecy in the sense that Fibonacci levels get respected. And usually that's where trading bots would take profits or wait to buy back in. So it's a very important tool and I will go over it now in more detail. But first of all, I just want to show you this clip here. So this is from Wikipedia, Fibonacci sequence. So as you can see from this diagram here, the sequence starts with 1 to 1. And then it goes to 2. So what it's doing is it's adding its previous number from the existing number. So I'll explain. So from 2 plus the previous number, which would have been 1, gives you 3. So 3 plus the previous number, which was 2, will give you 5. 5 plus the previous number, which would be 5 plus 3, which will give you 8. And then 8 plus 5, 13. 13 plus 8, 21. So that's exactly how they come up with the number sequence. And you can see it here, that's how spirals would be drawing. And yeah, there's a lot to it. So, but in our situation, we're traders, so we want to use it for trading. Okay, so we are in trading view now. And like I said earlier, the Fibonacci tool will only work in a trending market. So for example, if we have price action trending upwards, like we know markets don't go all up in one straight line, so it'll go up. So this would be a trending market, trending upwards, right? So for example here now, how would I use a Fibonacci tool? Okay, so if I had a Fibonacci tool here, I could use my Fib to find out where exactly the price action will consolidate, right? So what I do is I get my Fibonacci. So if you go to the left-hand side of the screen here, you'll see Fibonacci retracement, or you can just click on this arrow and it'll give you all the different Fib tools. So it's usually here on the top. So Fib retracement, click on that. So we always start at the bottom if it's trending upwards, and if it's trending downwards and you want to get a retracement, I'll explain that in further detail. But so for this example, the market is trending upwards. So you have higher highs and higher lows, higher highs. So say if this was the price action and I didn't want to buy up here because of the fear of it coming down again. So what I do is I set my Fib level here where it made its previous retracement, and then I'll bring it right up to the top here where the price is topping out. So as you can see here, it gives me a load of lines and different levels. So they're all very much points of interest, but for me as a trader, it's roughly between the 0.5 and the 0.618. The 618 is the golden area. So many traders will wait until price action will retrace to the close enough to the 0.618. Now, some traders will buy up if it's in between the 0.5 and the 0.618. So that's how you would use the Fibonacci tool to get your entries of a trending, if the market was trending upwards. So it also works in the reverse. So if you were in a downtrend and you wanted to sell, but you wanted to wait for a quick bounce. So, for example, market's trending down. It bounces here. And it's trending down again. Now, again, you want to, so if you were holding a coin or a stock and you didn't want to sell here because you can just see it's bouncing or it's going to retrace. So what you can do is to get your fib retracement, and on the high to the low, so in theory, if you're looking at the 618, the 618 level is here. You could bounce here and come back up to the 618. So then, that would be a good area to just cut your trade or sell your position. Okay, so I'm going to show you some examples in the charts. Okay, so as you can see here in the charts, right, we're going to pick this low end here in the charts. So we're going back to 2000 to 2020. So it was around March of 2020. We had the March sell-off. I think it was the COVID scare that caused that big massive dump. But so we're going to put out our retracement tool again. We'll set our lows. This is a trending upward market. So say if you came into this market and it was trending upwards, right? And you didn't want to buy in here. So you're like, okay, you have to be patient. You have to wait for a retrace. So what you do is you would get your fib retracement tool, set it here on the lows, and then you bring it up to these highs here on the wick. So we'll just bring it across here just to extend our lines. So as you can see from this tool here, it's giving us the 0.618, which is here, which is this line here. And as you can see that the price did shoot up really quickly, but it did retrace and it did wick in. Now, it didn't go below the 618, but it stayed within this between the 0.5 and the 0.618. So that is what people call the golden pocket. So a lot of traders will wait until it retraced in between the 0.5 and the 0.618. And that would be an area of interest to buy spot long, or even just to, if you're putting in on a long, because that is it's a good retracement area. In theory, you can use this in any time frame. Let it be the daily, the 4 hour. You can even use, I wouldn't go as low as the 15-minute, but you could, like, in theory, it could work. But for me, I just stick to maybe the daily chart and the 4 hour chart. Okay, so now we're going to look at a fib retracement. Okay, so we'll use this high here. So as you can see that the price has been trending down. So say if we want to just set our fib at the top of this wick here, and we'll go down as far as this wick here, this low. We'll extend out the lines then. So you can see the price action completely sold off here, but it bounced here and then it made a retracement and you can actually see that the price came back up and hit the 618 line perfectly and then sold off again. So so this is only if you were holding a position and you didn't want to panic and sell straight away because you were expecting a bounce. And then once you got the bounce, then you'd set up your fib retracement tool, find out where the 618 is, and see if price managed to get up close to there, and then you could sell off your position. Instead of just selling down low here, you would have saved yourself X amount of money. Okay, so I hope you can all understand that. Like I said in previous videos, you have your trading journal. If you just jot this down, make a quick note for yourself, so therefore you can easily remember it. And even if you do forget it, you just go back to your trading journal, have a quick look, and it'll all make sense to you. So back in like November 2021, everyone was screaming that the Bitcoin price was going to go to 100K. So another way is, so if we're in price discovery, so say if like for instance we go back in time and we're actually here in the 13th of November 2021, and the price is at all-time highs, and we want to know how high could it possibly go. So what we can do is we can put our fib on the tip of this wick here, was the previous high, and we're going to bring it down to the low of this wick right here, and we'll extend out the lines a little bit to here. So you can see these would be the next point of interest. So if we were in price discovery mode, we could imagine, we could try and predict if the price was to go higher, this would be the 1.618, and this would be another point of interest where maybe to take profits or acknowledge that other traders will be looking at this as a point of to sell, take profits. So, and even if we went up higher, so to the 2.618, so this was reading at just over 120,000 for a price of Bitcoin. I do believe at some stage we will see these price levels in the next bull run. But yeah, so this is also a way how you can actually predict future prices of a coin or a stock for that matter. Yeah, so I hope this helps. I really appreciate you looking at these videos, and I hope they were helping you with your trading journey. And if you like it, please do me a favor, go down, hit the like, hit the subscribe, and leave a comment, and I will see you in the next video.